To begin first with the AGMs of the oil majors, what will be the most surprising event to come out of today, if any?
I don't think we're expecting anything drastic from the AGMs. I think, the focus obviously has to be on keeping spending low. There's so much uncertainty around the oil price. So I think the focus still is, particularly for US producers, is continuing to return to shareholders, which they've just failed to do over the last 10 years or so.
On the U.S. side, we've begun to see the pain, obviously, from the low oil prices across shale producers, and the estimates of the number of bankruptcies can be quite staggering. What's your expectation for what will happen to the sector there?
I mean, that's the fundamental question, really. I mean, like you said, the scale of shutdowns has been staggering. We calculate about 1.5 to 2 million barrels per day of production that's been voluntarily shut in over May. That number goes down a bit to about 1.4-ish in June. But even beyond that, because shale declines so quickly, if you don't drill, you're going to lose millions of barrels per day of production just from the decline rates. And I think that's the key thing over here, is that clearly at these prices, sure, it's a bit better than negative prices, which we had a month ago. And some wells could be economic at these price levels, but really, will money pour back into the sector? It's a very, very capital intensive sector. And we don't think that's going to be the case. So forget this year or next year when production will continue to decline. But really, even into 22, private equity money or just general lending, if that remains constrained, shale growth will really never go back to a million barrels per day again. You're going to look at 200,000-300,000 barrels per day of growth. So it's a paradigm shift.
Phenomenal. And Amrita, I want to ask you about Russia. If Russia does throw this spanner in the works, what does it do to, the OPEC Plus agreements and to, relations going forward, never mind the price?
So I do think there's a bit of confusion around the Russia headlines that you guys have put out. It's not quite accurate. So the current deal that's in place already, it's a 2-year deal. The May and June cuts are the deepest, following which in H2 2020, OPEC Plus as a whole reduces the volume of cuts from 9.7 million barrels per day to 7.8 million barrels per day. Then that cut reduces further next year. So it's already been agreed that OPEC production will reduce the scale of cuts. I think that's been spun as an increase in production, if you see what I mean. Firstly. Secondly, the local news outlets and our sources, what we are hearing from Russia is different in the sense that it hasn't been agreed that they will stick to the agreed deal, which is an increase in production. There are companies that are talking about potentially continuing with the May and June cuts, i.e. the deeper cuts into Q3, because ultimately, remember, Russia's market, 70% of their exports go to Europe. Europe is still very, very weak demand-wise, so Russia doesn't necessarily want to increase production. Of course, There are some companies in Russia that do want to, but not all of them.